Hello and welcome. This is Chart Request Live. We'll do the charts. You do the requesting. We're live every Tuesday and Thursday at 1 o'clock Eastern Time right here on Stock Market TV. I'm joined as always by Patrick Dunawilla of the Chart Report. What's up, Pat?
How we doing, Steve? Happy
Good,
Thursday.
man. It is Thursday, right? People are getting mixed up with this short week out here.
Yeah, I mean, it seems like like 3 out of the last 4 weeks have been these short weeks between New Year's and Christmas, and the last holiday.
I think
Yeah,
you're
it's,
right.
it's, it's very disruptive.
I think
Give
you're
me
right.
give me a full week. Give me a couple months of a few full weeks. Get into a routine. You know what I mean?
You ready to do this?
Yeah, we're ready to do it. You want to start off with anything? Anything caught your eye?
Yeah. NASDAQ tried. Good effort today, but we're trading right around here at the lows of the day right now, at the lows of the day.
Yeah, well, what
This,
do you call that? A hanging man?
does this gap fill? It's a failed attempt, right? It's not even a failed breakout, but just rejected right here at the late December high. And if you zoom out, you could see why this is an important level, right? Really trying to get this breakout not just completed, but confirmed, above these prior cycle highs. And it was looking good this morning, not looking as good now. Let's wait. It's 104 here, right? Let's wait and see kind of how the action shakes out and closes here today.
It's like today's action is really just kind of part of a bigger consolidation, a bigger stalling that's been going on all 2024 so far. But
Yeah,
do you want to get into it?
let's
Let's
go.
get to some of these requests because we have a ton today. So hopefully we'll get to the chat soon. But let's kick it off with XLE. Start kind of bigger picture.
Yep.
The energy sector. This one comes from Eric. Hate to talk about the laggards, but sized into this one throughout last year, considering scaling out of the position.
Throughout last year, he said.
Yeah, and I get it. This one is a sector that looked like it was going to go, looked like it was going to break out, and it just hasn't done it. But at the same time, hasn't died. It hasn't really broken down yet too much.
So he's not thinking about it this long term, but I want to draw this anyway.
Sure.
You zoom way out, there's really something here, right? For
Oh,
energy. When this base finally goes, and there you go, it's never going to be perfect, right? So you got the 2006 highs. You want to jump it, and then you get confirmation at the 2014 highs around like 101.
yeah.
We just kept running into this level since first half of 2022 now and getting rejected, right? When you zoom in, I can show you other energy subsectors, uranium, coal, which look very similar to this, off of the 2020 lows, straight line higher, and then 2 years of consolidation, right? Or a year of consolidation for coal, year and a half more for uranium, and then an eventual upside resolution. I do think eventually oil and gas indexes, like large cap, the XLE here, do eventually resolve higher. But for now, you could see this little trend line I'm drawing off of the July 2022 lows. The short term and the intermediate term momentum are totally broken, right? So long term, fine. Primary trend, the structural trend is okay. Short term, this is nothing but opportunity cost, especially in a market where things like technology continue to trend so well.
Yeah, it's
So
kind of fumbling its momentum. It had the momentum and it didn't really make good of it, right? It didn't really make anything meaningful out of it so
we could
far.
talk, yeah, and we could talk about this one for the whole show, right? It's really a tough one. I'm not going to do it justice here just by looking at XLE. I would love to pull up a chart of crude or gasoline. We were just
Well,
talking about
here,
gasoline.
let's move on to the next one because it kind of goes along with it. This one's from Wavy, one of our loyal viewers. Wavy, what's up? DBX. Or I'm sorry, it's not from Wavy, DBC, Commodities. 'Cause I, 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 it's not from Wavy, DBC, Commodities. And then we'll get to wavies after, but
Well, I just had up a chart of crude and you saw range lows. I'm sorry, that was gasoline, and you saw some range lows coming into play. This is the Invesco Commodity Index. This is just a broad commodity index. It owns futures, and not great, but not terrible. You know, you would eventually want to draw this one something like this and be able to say we're back above, you know, these September 23 highs. The reversal's in for now. Just got to hang on for dear life, defend these pivot lows from the summer of last year. Maybe you get a little scoop move here, Pat. The RSI does look enticing, right?
yeah. And this one,
Definitely.
this is a lot of crude. I don't know the percentage that crude oil is in DBC, but it's big. It's at least 40%.
Yeah, it's a
And
lot
then
of.
you have all the other energy commodities in there too, heating oil and nat gas, things like that.
Here it is. For this trade, this one's easy. 22 is your level. 22 is the level. You don't want to own it below there. We're at 21.95 today. Let it dance a little bit. Hope for that hook higher, right? But you don't want to really own this one much below 22. And then real quick, if you want to look at the actual index for more information, I think that this one is actually the Bloomberg Commodity Index, DBC. You have to check, but it's all based on a certain index. So you can always just go. I don't think I have the Bloomberg commodity here. You can always just go and look at the actual index itself and identify price levels and use that to enter and exit in the ETF trade.
Always good advice. But let's move on to stocks. I got this wrong. Let's move to DBX. Has nothing to do with commodities, DBC.
Dropbox.
But yeah, let's move to stocks. This one is wavies. This one comes from wavy.
And we got COR next.
Yes, sir.
Yeah, you know, this looks like a lot of good ones out here. I'm not going to remark it up.
Wow, I didn't realize that it had completed that much of its base or recovered that much of its decline. Look at that. That post-IPO
like that.
spike really was something, huh?
I like this. This was wavy.
Yeah, this is wavy.
Always bringing the heat. I can't believe people still use this. This is old tech at this point. It's like old new tech. Seriously. Like in terms of cloud, this is like cloud data company, Dropbox. I used to use that different companies earlier on in my career to share files, right, with clients and stuff like that. That's really, I think, what it still mainly is. So kind of surprised, right, that usually the big boys, the Googles and the Microsofts of the world, eat up these businesses over time. But this one, really strong. So look, you got the base breakout, you got a little continuation pattern breakout. It's really in the middle of nowhere right now. I think you want to let this go back up to these former highs, and that's where you want to feed the ducks and kind of reassess, right? This 33 level.
Absolutely.
But right now, kind of no man's land.
Would you say those all-time highs are going to be like a magnet? What do you think about that?
You never know. Everything's different, right? A lot of stocks last year during the corrective phase into October were digesting, ran into those highs and started digesting. A lot of them got right through them this time around. It's hard to say, but once you're up in that zone, it starts to lose momentum. There's a lot of overhead supply there. So
yeah, Wavy says he's playing for a breakout. So I'm guessing you're maybe trying to wait on this one. You're stalking this one, but it definitely looks like it's shaping up for something.
Then what you want here?
Let's say, let me ask you this. What if you bought that breakout, the little consolidation breakout there?
Here?
Yeah. What would you be doing now? Where would you be looking to take profits?
Watching momentum. I would be keeping it real tight, right? Because we're already here. We're in this zone. You could draw it as a zone, right? We're already here. So if it started to kind of roll here or really lose momentum in any material way, I would keep it tight. But I think Wavy's more asking about getting in. I think what you want in terms of getting in, right? Again, it's a zone. So you could start to call this a breakout, in this gray box. If you get a couple more days or weeks of sideways here, right? Because again, zoom in, we got the reversal pattern breakout here in June of last year, ran up, consolidated again, the short-term continuation, broke out again. This one's so constructive, right? Just stair step.
I know, right? Nice successful retest there and then go.
Totally. So this has been a nice run. Look at this bullish engulfing last week. beautiful follow through. You want something just high and tight here, ideally, right? Who knows how long it lasts, but that's your entry, right? You play some sort of short-term continuation here, a little chop, 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 and go. That's how you want to play that for sure.
I like this setup. This is definitely one to keep an eye on here.
You want a little coil there, and then your entry is the upside resolution.
That base almost looks like the base in Uber, but Uber doesn't have all that price action to the left from the IPO that this one does, but definitely surprised to see this one shaping up so well. Let's move to Core. COR.
Uber looks great, by the way.
Yeah.
Fort?
Core, COR.
This is energy?
This is healthcare. Sencora. I don't know if I'm saying that right, but
Do I have a time frame? Do I have any information?
Let's see.
What is strong stock?
This is from Dan Core. If you're in the chat, Dan, let us know. Looks like a strong one.
Looks really strong. Problem is, sometimes with these uptrends, when they're this steady, right, nearly vertical, just really steady up and to the right, it doesn't give you anything to the left to use for price memory.
Right.
You know what I'm saying?
It's looking like parabolic at this point.
I don't like this one. I like it. I don't like it from
Unless you're long. Yeah, at this point. What are you gonna do?
I don't like it from a tradability standpoint.
Even that little consolidation in the last few days, like what are you gonna do? Buy that? You're gonna call that a flag? I mean, that's tough.
Momentum's at 78 right now. I'm gonna say the same thing, Pat, that I just said about Wavy's Dropbox. What you really want here, right? Because you got the gap, earlier this week or no, late last week, gapping into some sort of a short-term continuation here, that would be constructive. And then you could play those levels. If you entered this a while ago and this is a longer-term investment, right? Then maybe something like this, use this last consolidation as your stop, but you do kind of want to let it dance. The stock this strong.
Let it dance.
What? Yeah,
let it dance.
I want to let it dance. If you have a longer time frame, right, and you're looking out, this stock is incredibly strong. It's showing no signs of slowing down. So you don't want to stop yourself out on this kind of short-term coil failure if that happens. You want to give it some breathing room. So I would use like 205.
I want to get a shirt that says "Let it dance." But we got a great question in the chat here from Rigo. You don't look at volume. Any reason why you don't look at volume?
Markets have evolved. If you were trading in the Philippines where they don't have derivatives markets, they don't have dark pools, you got like 200 listed equities, right? Not all these crazy hedge funds doing sketchy things. The volume in the equity market is going to show you more or less the whole picture about that security, right? But because the United States capital market system is just so advanced, there is volume taking place that you can't see in different markets, whether it's derivative markets or if it's through dark pools, right? It's not what it used to be. The guys who wrote the textbooks 50 and 100 years ago and talked about volume being so important and an excellent signal would probably agree. They were right then, but things have simply changed. So that's why it's not that we don't look at volume. If I see like some really strong volume or something, sure, I'll pay attention. I do have it on my TC2000 charts. But in terms of publishing or when we're doing something like this, for purposes of just illustrating the chart itself, you want to keep it simple. And if you don't want an indicator on there that you don't want to speak to, right? So that's why we're leaving it off here. But we consider
the best
we look at it, we don't love it.
That is the best advice I've heard too. To keep your charts clean, because when you're presenting a chart like that, you want people to see what you're talking about. If you have all these indicators that you're not even talking about, keep them off.
Right. Right.
But
I shouldn't have momentum on here.
I think it was a great question. And also, if you look at like the S&P and volume on SPY, you often get at major lows, you'll see a spike in volume. And then as the market recovers, volume will kind of drift off and just kind of diminish like that. And so it's kind of like almost counterintuitive now. So it's, trying to figure out a signal from volume's tough. Volume weighted average price, though, there you go. There's something there. So if you like volume, if you want to try to incorporate it into your process, Let me tell you about VWAP.
Go read Brian Shannon's book. We don't have time for it. Team Atlassian Corporation. This has been a strong one for a very long time, Pat. Very long time. Very long time. 2 to 100 club member. Get this volume out here.
And this one, he's viewing it on a 6 to 12 month hold.
Really
So
nice.
Kind of longer term than
I wanted to zoom out 6 to 12 month hold. Okay.
6 to 12,
Well,
yeah.
then just know on that kind of time frame, you love to see something like this. Right? Love
Primary
that.
uptrend.
Love that. Okay. So that's what we're working with. When we zoom in here, that's where we came from. That's the context. Let's drop a fib, see if it gives us anything. I have a feeling it will. Aha. Sometimes you could see it, you know. Boom.
Drop
Really,
a VWAP too.
what?
Drop a VWAP too.
Pat wants me to drop a WAP.
A VWAP. I'm not sure. I haven't even looked at it, so I don't know if there's anything there, but
Drop the WAP. I'll bet you it comes in right around this base breakout level. Ooh, the pivot highs from September. Beautiful. Look, you see price getting rejected here
failed there.
last year too. You can describe this trend reversal in every single one of these ways, right? Trend line break, nice, beautiful base, great. Reclaiming the VWAP from the prior cycle highs. All of these things suggest trend reversal, right? The trend has shifted. Path of least resistance is now higher. If you really want a level, I think the 38% retrace gives you not just a nice level, but also you have a short-term continuation pattern forming here, which is probably more important. So you draw this out, something like this. It is a little bit sloppy. Looks like, was there some earnings related volatility? No, there was just some, you know what this is? This is whipsaw hunting season related volatility, right? This is a trend that got extended into year end, peaked on literally like, the last week of the year, and then got smashed hard as soon as the big boys came back to work, got to their desks in January, and now recovering, taking another shot at this level. So I think you buy strength here above, call it 247 all day. And this was the 6 to 12 month time frame, right?
Yeah.
And you can, let them dance, get jiggy with it. So 247, 250 back to like 485, almost a double.
Wow. I like
6
that
to 12
one.
months. That happens in 6 to 12 months in a bull market with the software stock.
And you know what? There's no name for that pattern you just drew, but I love to see those downtrend break and then forming a base. I mean, that's how base is complete, and that's how they get formed.
There is actually there is a name. There is a name for it, Pat. It's just not one of the fancy ones. You know what they call these?
But
Reversal patterns.
oh, there you go. All right.
No,
So listen, we got two more. We've got two more in the mailbag to get to, and then I
Yeah.
want to hit the chat because we got a ton to get to in there.
You go.
Let's do TFII 6-month time frame.
TFII. We use all these funny names for patterns, so you'll hear more about the Head and Shoulders than anything else on the bull flags and stuff like that. But at the end of the day, every single pattern is one of two patterns. It's either a reversal pattern or a continuation pattern. What's the third?
Well, yeah, okay. Okay, yeah, that's fair.
Everyone falls into those two buckets.
I was breaking it down to a reversal can be either top or bottom, and then you have a consolidation. But
it's a reversal.
It's a reversal. You're keeping it even more precise there.
I mean, if we got into it, you are right? Because the way that bottoms act is a little bit different than tops, but the principles remain the same. TFII is another leader. You got the base breakout here already. What's it? No time frame, right?
6 month.
Oh, great. The time frames help so much. We should request, guys, give us your time frame. It'll help both of us out so much.
Totally.
I like that. Look at this. It's a beautiful base up here, chopping at these highs from what, September?
Is this a trucking company? It looks like it says ground transportation, industrial.
Trucking. Yeah. Sweet dividend yield. Love that dividend. 1%. Really nice.
It's a sweet spot, right? Not too much. If it's too much, you got to ask questions.
Definitely the sweet spot. 11.3 billion. Also kind of the sweet spot from a market cap perspective.
Yeah.
Cool. So nice base.
Nice
Cool.
sector too, industrials.
There you go. So there's your level. We're going to say 137, 137.50.
I
Are you
like
really
it.
buying this
You know what I like about
continuation
this one
flag?
is, you know,
Yeah.
it's kind of in no man's land, but you still made a trade out of it. You still found some levels.
Yeah,
Um,
see, it's nice when you have a little bit of price memory, right? We have some former highs from September, which we could lean against here.
all right, so this one's an easy one for you. This is the last one in the chat, and then we'll hit the chat. DraftKings. I know I heard you talking about this one earlier on the morning show.
Bought more yesterday, shorter term trades, sold some today, different position, longer dated options that I already had. Yeah, giving back some today, trading on the lows a day. Listen, if I'm being honest, I have a 15-minute chart of DraftKings open in my screen
Oh,
below because I did.
one of those days.
I exited this one today. I bought it yesterday on the morning show, and here's a lesson. A short-term trade like that, I was looking for an automatic reaction off of this little trend line break shown right here. This is our level, our bigger, when you zoom out. So for context, 34.50 is our current risk level. It's been our current risk level since last summer when we first got here in
And that's
August
the
of last year.
38.2 retracement.
38% retracement of the drawdown from its all-time highs back in 21, right? So I was talking to the guys on the analyst team meeting. Sean just put out an options trade on this. It's longer term than the way that I'm trading it, at least this week. And I was talking to the analyst team. I said, guys, remember, they were oohing and ahhing over. I said, remember, this was one of our best stocks the first half of last year, right? One of our top long ideas. It was so good. And then it's just gone sideways. It's trading literally, when we were talking yesterday, it was trading at the same place it was in August of last year, right? So you got the reversal pattern breakout shown here, right? And then you have just a big consolidation. And I just had the VWAP dropped here, saw it gunning at it yesterday, saw the trend line break that always happens first on a reversal. This is a very short-term reversal, right? We always get the trend line break first. I bought some calls the morning show yesterday. It was up 7% this morning when the market opened. I took some off the table, right?
Nice.
That's it.
There you go. All right, you ready to move to the chat?
Yeah.
Awesome, let's do it. So this one's from Donovan, NVCR.
So long story short, the level in DraftKings right now is 34.50. If you want to give it some room to dance, use the pivot lows from last week. NVCR, Novacure, I know this name well.
Nice pop today, 22%.
This one was bad, and then it was good, and then now it's bad again.
Is this biotech?
Cancer. If I remember correctly. This was a big trader stock. Long time ago.
There's always those weird ones that have you ever
Yeah.
looked at the high volume list and it's just the weirdest list. Like Vale or VALE is always on there. No idea why. Bank of America.
Yeah, I bought and sold this one a couple times back in the day. So now it's a really ugly downtrend. And I guess maybe showing signs of life. Pat, if I were a betting man, I would say there's probably a pretty decent short interest here.
Well, and in
You
today's
able to?
action, I don't know what's going on. There could be some news, but it could also just be short covering at that rate. Somebody had a great trade. They're out. They're getting out of it. And a stock like this, you could have. It's actually pretty liquid, 4 million.
Listen, it's fine. What's the market cap though?
1.6
Billion?
Yeah.
Let me check something.
What do you think of it?
And you never know with these guys. Uh,
There's a really cool book about patterns and their win percentage by Thomas Bulkowski. Yeah, that's actually one of the ones in the CMT curriculum.
listen, yeah, we were talking about that in the morning show today, Bulkowski.
Oh, really?
Yeah, you should go watch the show. So 15.
Most of it. I miss parts. It's early.
No, I mean seriously, you should. 15 3/4. Fine, but I like it less knowing that it doesn't really have a catalyst type of a short interest. Very not a big short interest.
What do you like to see for short interest? What's your kind of
Ah,
what is high short interest to you?
it depends because I think days to cover is more important, right? So if
Ah,
there's a monster days to cover ratio, if the short interest is at least double digits, cool. At least
okay.
10% if there's a big days to cover. But outside of that, I want something high teens, high
Can you
teens at
explain what you
least.
mean by days to cover and why that's
Days,
important, what
all
you're
days
looking
to
for
cover.
there?
Yeah, good question. All days to cover measures is it takes the short interest, the amount of shares that are currently held short, and then it takes an average volume number, typically 20 days, maybe 50 days, right? So average trading volume per day in the stock. And what that tells you when you take the short interest divided by the trading volume is how many days it would take short sellers to cover all of their positions if all of the volume was short sellers covering positions. And typically you'll see 2 days, 3 days, right? Once you get to 4, 5, 6, that's a lot and stands out. Sometimes you'll see ones with days to cover 15, 20 days. And that's wild, right? Because, of course, when there is a short squeeze, you get monster volume bars. The volume could be 5, 10 times higher than it is on average, right? But it's not all just the short sellers doing that volume. So it will take time. And when that volume blows out, typically you're getting a really big move to the upside in a shorted stock, right? So not a bad thing. 15,
So
15 and three quarters.
let's go to macro real quick. Abraham asked about DXY, the dollar, because I mean that's pretty important to all the other setups out there.
This is it for me. Get rid of that.
Now you're really zooming out there.
Really zooming out. And I could zoom out more.
You know
I
what?
could
The
zoom out
last
more.
year or two looks kind of basey when you do that. That is a little freaky.
It looks a little basy. Yeah.
Yeah.
Yeah, that's fair. Pat's talking about this.
And what the reason I say it's freaky is because so a lot of you know the dollar inversely correlated to stocks in the last few years. You know, those correlations can change, so there's always that. But as long as it exists, you do not want to see a stronger dollar here if you're a bull.
And you don't want to see these prior cycle highs get reclaimed in any real way.
Yeah.
Another shorter term level would be right here. Could use make sure that VWAP is in the right place. The VWAP from these highs. What happened? Where'd you go, VWAP? Oh God, no, you can't. There's no
Yeah,
no
there's no
volume
volume.
on this, so you would want to use something like the Euro
Use
USD.
USD.
So you would do right. So this would be more or less the inverse of Dixie. This is like 60% of Dixie. So this VWAP is something that we're paying attention to. Right here, off the pivot lows. That would be the equivalent to Dixie VWAP off of the pivot highs.
What's your level on DXY? Is it 103, 105?
Like literally right here, but it's a zone. And I would
Yeah.
see confirmation with these pivot lows or these pivot highs, right? In either direction. So 103 and change, but you need confirmation because this one's been a mess, right? Just look at it. Just
Yeah.
sideways, straight sideways.
Let's move on. Bill is asking about the gold miners, and I think that's interesting because in some of our work that we were doing, a lot of people were talking about gold miners this last week, really. They got
We were talking
last
last
2
night.
days.
Yeah.
Go ahead.
We were talking last night. What did I tell you about gold?
Oh, yeah. Steve told me, he's like, don't ever mention the word gold for me. One of my New Year's resolutions is not to even think about gold. So we might have shaken the beehive a little bit here, Bill, but you're
You
gonna have to
couldn't
deal with it, Straza. What do you think?
you couldn't make it a day.
I couldn't, yeah.
All right. Fine. Fine. We got to give the people what they want. Look, it's
Yeah.
terrible. It's terrible is the answer. It's not even clean here. But you would draw it something like this, right? Make
I'll
that.
give you one that I like though.
I mean, all right.
Uh,
Excited to see it. It's not even a top because what's it reversing? It's just like
oh, shoot.
ugly
Bill's asking about the
consolidation.
crypto miners. My bad.
Oh, he didn't ask about gold miners?
Now he was asking about the
He-
crypto miners. I'm
Pat can't
sorry.
help himself.
That's,
All
that's
he wants
my
to do
fault.
is talk about gold.
Yeah.
God. All right. Which miner? Mara?
let us know, Bill, if any in particular, or you could just look at the ETF, WG.
Look, no bueno here. No good. 19 on strength. That's your level. 19 on strength. We're below there now, showing no signs of stopping. We ran right into these VWAPs here, but it looks like there's lower to go. If you drop a VWAP from the old record highs, you get come in right below here, right? Maybe that's the last line of support. Then we got to start talking about $7 again. This one, when it rises aggressively, right? It doesn't just go up 10, 20% like normal stocks, like doubles and triples in a matter of months, right? This thing went like 3 or 4x from October to December. It's insane.
Do you think there's an element like what we're seeing the last week or two, 3 weeks? Do you think there's an element of these stocks being used as people's crypto proxy, right? Because if you wanted exposure to crypto and you didn't want to open a crazy wallet
I get
or
it.
something like that, you buy the miners and that's how you're playing. And then all of a sudden there are these ETFs that come out.
Yeah.
There's a new way for fund managers or whoever to gain exposure to Bitcoin.
I don't think so.
That, or
maybe, but that would be kind of messed up.
right.
Because this is not a proxy for Bitcoin. This is a quadruple levered proxy for Bitcoin, right? Like this would be like buying what are those like short NASDAQ 3X, something like that. It's those crazy leveraged vehicles, Mara. So I would hope advisors don't do that. If you wanted to say micro strategy, that's maybe adding to what's happening to micro strategy, because I do think that was rightfully so accepted as an alternative to something like GBTC, because it really is a spot Bitcoin fund. But these are different. So look, we're retracing about 61% here. I think the VWAP here around 1470 is the last line. You can't own this, though, below 19. You shouldn't be in it at all right here because you're back in the penalty box. Again, only strength above 19. But just from a crypto market perspective, the alts were weak when I woke up and got to my desk this morning. They're weaker now. There are some short-term tactical levels that are kind of giving way in a lot of these altcoins. It's not looking... Look, the primary trends are fine, but it's looking like a little bit lower and more corrective action for crypto from here. You don't want to own a stock like Mara in that environment.
So let's move on to one that we were talking about a few weeks ago, but key. I know we talked about that on the last show a lot.
Mm-hmm.
And we kind of came into this week, regional banks. It was all about regional banks, at least for me, and it sounded like for you too. So let's check on them.
Gave back all my money in this one. All my money. Gave it back. You had a nice little like memory pocket here, right? Volume pocket.
And it got like halfway into it.
You rarely see this. This is why we have theory, we have technical theory, and then we have technical analysis in practice, and they're different, right? They're up in the gap. The trend's looking great. Just look at this. Up, coil, up, coil, up, coil. And it looked like, okay, we're coiling again. We're in that gap zone. The reversal, right? This little base breakout here is in. Awesome. Looked great. And then all of a sudden, this little coil here gave way, and the evidence was there. I should have sold these last week.
I mean,
Evidence was there.
Though, you did recognize as soon as it wasn't resolving higher, you recognized that it probably wasn't going to go in the,
The only reason I held them there, they were calls, and I thought we got earnings coming. Maybe I get a save. Sometimes you do see these coils shake lower first and then go. At this point, position is so close to worthless. I don't care.
I think you could argue that this is a healthy retest after the progress that they made at the end of the year, right?
Just about to say that.
Longer term.
Just about to say that. So this looks like a lot of them. You want the ones that are right here retesting this level. If you want to take a shot here, look, short-term momentum is broken. The short-term relative strength that we saw from financials, and we're talking about in late December and even earlier this month, is gone, right? Banks look particularly bad within financials, even. So, do you really want to be entering new positions right now? I don't. Maybe not. But if you had to, and you're interested in the banks, and something like KeyCorp is above this 13 level, the reversal's in. Trend is still higher. Who knows how long we chop around here now, right? How much time we waste before we keep going higher. But yeah, this is a very actionable level. And if I could just shout out another one, Truist Financial. TFC, same thing, right? I like the ones that are super clean. So these are the ones on my radar. Truist also. And I think I haven't looked into them enough yet, but Truist seemed to have a better report, at least the headline and the summary page better than KeyCorp. So, and it was up this morning, but everything's reversing here today, Pat. It's not great. And again, just we talked about it last time, but betting on banks on the long side, you have lower odds of success if JP Morgan is not breaking out of this pattern. Right? We want to see JP Morgan, the biggest bank of them all, the bellwether of the group, completing this breakout, taking out these old highs.
Yeah, it was an ugly fail break for JP Morgan.
I like buying banks if JP Morgan's breaking out.
Yeah. So let's this is a good question from Achilles. Can you talk about risk management in terms of stop losses when you're swing trading, right? So a 3 to 6 month horizon, how do you kind of use stops appropriately to where you don't get stopped out?
3 to 6 months is a long time to swing trade.
Right.
I'm swinging. I think it's similar to position trading, maybe a little shorter term, but swinging usually be a couple weeks.
But okay, regardless of what you call the type of trading, what if you had a position for 3 to 6 months, how do you protect it without, getting whipsawed out?
So I'm going to assume that this is about you're holding common stock, right? So let's remove options from the equation because I manage those differently, and you should, and most people do, right? Sean talks all about different strategies for managing positions in the options market. With an equity, I'm trying to think of a good example. Use an Uber, right? What you can do as something is slowly grinding higher, right? And you're entering breakouts like the one here. You want to already have a price target, and ideally it gets hit. But as something starts to lose momentum, something like this in Uber, when this breaks, right, and any sign, you had a short-term continuation pattern here, which resolved lower here. You want to be out of that. If you have gains on the table, right, short-term continuation patterns should continue. This is why trading's hard. You're selling that here. And then today you're like, shit, if you didn't buy it back, right?
Yeah, I was going to say it's a tough question because that's kind of, the trade-off of trading, right? Is how do you manage that risk and also not get stopped out, not get scared out?
You have these little tricks, right, to measure short-term momentum, right? Trend line's broken there. That was also a good sign in KeyCorp. Maybe you could drop a VWAP, depending on your risk tolerance, how much you want to let it dance. Look, it caught the VWAP. That would have been my last line of support, right? Ran right back to the VWAP from the pivot lows in October. Now back off to the races. So you have all of these tools, and different tools are going to be right for different people with different preferences and different, levels of risk. But you want to use something and have some sort of a process, some sort of line in the sand, not just say, oh, I can't take any more red, I'm out. That's not how you want to stop out. So any one of these would work. Just have some sort of process.
Awesome. So you want to do a few more? We got time?
Let's do one more.
Let's do, in that case,
Pick a good one, Pat.
a good one. Well, let's do ETRN. I have no idea what that one is, but that's why I kind of want to look at that one.
An MLP.
Is that what it is?
Oh, this is fine. Better
We'll
be
do more
paying me.
after this.
5.8% yield. Okay. Wow, this is a big gappy daddy. All right, so not really getting it done here. A couple different touches. I like this one a lot on a breakout of this base. What do you think? We talk about how some energy stocks ran off the COVID lows and then went sideways. Well, my God, this one didn't even rally that much off the COVID lows and then just straight sideways. If I benchmarked this against energy, it's going to look terrible. Oh, I know you're going to get whatever, almost 6% yield, but this is how this stock performs relative to its peers since it IPO'd in, or late 2018. Maybe it's the beginning of something, right? We are seeing evidence that MLPs, refiners, tankers, and the like are the new leaders in energy, but that's not usually the case in a bull market for energy. It's usually the explorers and producers and the oil services. So maybe some sort of trend reversal in favor of ETRN. I think, again, you have a clean level. You have somewhere to trade against if and only if, though, it gets this base breakout. Right? So you could use this high from 2021 around 1140 or this high from 2020 at 1170.
I can't believe I'm saying this to you, Steve, but I would use a horizontal level on this one.
I mean, is that not horizontal enough, for crying out loud?
No.
It's a zone. There you go. Boom.
All right. Let's do one more. I'm trying to get to, I know some people requested multiple ones, but I don't think I got to James. James requesting STAG, STAG. And we can do Alta if you want after too.
STAG Industrial.
See what they do.
It's a REIT. Really? All right. We got a level here. Pat likes horizontal lines. We'll give him horizontal lines. How about that?
Hopefully.
That's pretty good, right?
Yeah.
You want to just be able to define a reversal somewhere. Fib ain't helping. I like the August 22 highs usually, but they're way down here. You got Q1 2023 highs and a couple touches, in the summer of 2023, throwing right back to that level. In something like this, you can treat this as a false start, which it really was, right? Out of the box, right back into the box, failed test to try to get back out of the box and heading lower. Then finally got the breakout in December, throwing back pretty hard. This is your level, actionable right here, right now. 36.80, really 37. See the candles.
I like it. I didn't see something on this one at first, but I like what you're saying there.
Yeah, that's good. 37 price target. You got stuff going on around 42 and a quarter, and then the old highs around 48. I mean, listen, bull market, most of these, your target should be the old highs.
I like it. Listen, if you want to do Alta, we'll do that and then we'll shut it down.
Last one, congratulations. Speaking of cosmetics industry, ELF Beauty, ticker symbol ELF, added to the S&P 400.
I think we looked at that one last week.
Strong stock. All it does is go up, so it'll probably be in the S&P 500 next.
I mean, Ulta is one of those just persistent winners since it's gone public too. I mean, it's one of those that like Domino's or like Monster Energy that like you look at it since its IPO and it's like, how the heck is that thing up so much? Like, and why doesn't it get mentioned in the same conversation as some of these other mega caps? I mean, obviously it's not as big, but in terms of price appreciation over the
they've been great. These companies have been so good.
Up there with the Amazons and the.
You'll often hear people talk about makeup or cosmetics business as like recession proof, right? Which a lot of times people call things recession proof. They're just in secular bull markets, right? Like this is just a secular trend. It's, animal healthcare, certain areas of biotech, medical devices, right? There's a lot of secular trends in healthcare. Health insurers have been in a secular trend since I was in college. Uranium's in a new secular trend, right? Sometimes it's not that it's recession proof. It's just good times. So this is a beautiful chart. You got the base.
Isn't it funny the narratives that get crafted after a trend is in place for a while because people need a way to explain what's going on here, and those are the most dangerous things ever. And it's so hard to ignore them sometimes. Even knowing that, it's so hard to ignore the narrative
because there's a lot of good storytellers.
And we love stories. We're human.
Yeah, we love stories. We're human.
Yeah.
So look, Look, where would you ideally have been buying this one? If you like buying weakness, you would have bought this retest right here, right?
Here, fix the scale. Go hit auto.
Towards 368, right? You could have bought that retest. Now we've launched off of this polarity zone, heading higher, and we have a really nice coil in place right here. I think you just play the resolution here if you're looking for a trade. And the way you want to do this, sure, it's a diagonal line. So what I really do is drop a VWAP typically, right? And if we're above the VWAP and then we're above the trend line, good, checks both boxes. So you want to enter on the resolution here. Boom. And then short-term target, 519, longer-term target, maybe 555, those old highs. And if you want to target longer than that, you want to use the 261 of this base, right? I don't know. I'm not sure the time frame. So 764. Those are your options. But this is a secular leader, really strong stock for a really long time. That's it.
It's funny though, you mentioned whipsaw season earlier. Look at how this one just touched the low from that gap up. I mean, you got to imagine there's probably so many people that place their stop right at the lows of that gap. And then it just kind of drilled into it really quick and then dipped into it, got all that potential supply there, and then rocketed higher.
Didn't want to fill that gap. Look at that. That's constructive, right?
Yeah.
Pat,
Yeah.
whipsaw hunting season. Did you see this chart? RKT I shared in chat.
Oh man.
So this is what we're talking about when we talk about whipsaw hunting season, right? Into the end of the year. So this is a nice base here in Rocket. We broke out this stock though from its October lows to its late December highs, and it literally peaked like the last day of the year. Peaked on like Thursday instead of Friday, right? This thing rallied 100% in 2 months. It's a heavily shorted name, so it was short squeezing, all that stuff, right? But then again, people who control the money get back to their desks on January 1. This thing gets absolutely smashed down like 25% in like 2 weeks, right? So that's what we're talking about. We're talking about trends that are already extended tend to get way overextended in the last few weeks of the year. This is December 13. Let's just look at this melt up. And then they get knocked back down to reality in the first few weeks of the new year, which we saw like almost perfectly here. So I just thought that would be a little fun exercise to illustrate what we mean when we talk about whipsaws.
Yeah, that one's a wild one. And I'm seeing short interest is still 15.5%. But you know, those figures, you can never really trust short interest data. It's always like 2 weeks delayed or something. You never know.
They're working on it. Clean level here, though.
Are they working on it? I don't know.
They're working on it. They're working.
All right. Well, thank you guys so much. Steve, you wanna lead us out?
Yeah, thanks everybody for joining us as always. We'll be back here on Tuesday at 1 o'clock Eastern time for our next chart request live.
Any big plans this weekend?
No, I'm going to New York. So I'll be in Connecticut.
Yeah, that's right.
Hanging out, gonna spend like Sunday with my parents, Monday with my grandmother, and then train into the city Sunday afternoon. So I know I'll be seeing some of you guys that are probably in the chat and watching the video right now. So really excited about NYC next week. We won't
still be doing the morning show. What's the plan for that?
You're going to be doing Chart Request live next week without me. You're going to miss me.
Fun.
I think so. I don't know. Spencer will have to check on that. We'll have better announcements tomorrow morning.
Oh, wait, we got one really good question here. Straz, are you going for your CMT this year before it lapses?
Somebody's been tracking.
Keep bugging him about it. I've been on his case for a while.
I don't think they lapse. I don't know if they lapse.
I don't think they do either, because I know
I don't think they lapse.
I know a couple of people who have gone like 8 years. There might be a gap though.
I'll be an honorary member soon enough. No, I'll be with Tyler Wood Tuesday night, so I'll ask him about the lapsing stuff, but I don't think so. Great question, though. Great question. The over-under on that, nobody knows.
Thank you guys so much. We'll see you on Tuesday.
All right, bye, everybody.